and welcome to this episode of Derek Invests, July 30th, 2024. What we're going to talk about today are earnings releases. So we have some companies that release earnings today. So we have Advanced Micro, ENA, MRK, PayPal, Pfizer, Procter & Gamble, and StarBucks. So what we're going to break down today are those charts. We're going to see if we see price going in any particular direction. I'll do some education as always in this, and I'll show you what I'm looking at, why I'm looking at it. Like that. Reminder, we have an August mentorship starting in a couple of weeks. In that mentorship, we will be incorporating some crypto conversation and how what we do here applies to crypto. Crypto looks a lot like stocks nowadays. It's moving in a lot of the same, it has a lot of the same mannerisms, the same footprints are showing up in crypto that are showing up in the traditional stock market. I believe it is going to become just another asset class. Perhaps it is the riskier asset class, depending on how you gauge risk. I do not gauge risk the way that an asset allocation model would, which is a farce, because it would stipulate that bonds are always safer than stocks. And the amount of bonds you own versus the amount of stocks you own is based on age. I don't believe in any of that. Again, depends on how you view risk. I view risk as an asset class that has a lot of risk associated with it. 2 years ago, I thought bonds were the riskiest asset on the planet, and it turned out I was correct. I would say now they are looking like they are a good buy. If you go through and look at my review of the 20-year treasuries last week, you will see why I'm saying that. And there are institutional footprints all over that particular market. So in any case, why don't we get started? So I'll share my screen with you now, and we'll look at AMD first. I'm going to have to switch seats. That beautiful sun has come up and is now directly in my eyes. So let me share this screen, and then I'm going to switch seats. Here we go. There we are. Let me scooch over here. Much better. All right, this is a little tight. Let's zoom out on that. Scooch it over. We'll go on to our monthly chart. As you know, that is where we start all of our analysis, because the monthly chart gives us a long-term view, and that's what we're looking for. Looks like pre-markets open is up about 30 bips right now for the open. Our monthly chart on July does not look good for the NASDAQ, right? This is it's a reversal of price. That's all that means. It means the price went really high, up towards 500, and it's reversed back down. It looks like it's going to open around 465. So, 8%, roughly, an 8% reversal in July. Not traditional for stock markets, for the stock market to reverse in July, but it happens. I have not seen anything yet that has made me leery. I did an evaluation of the market last Friday after the close, or Saturday morning. It may have been Saturday morning that I reviewed the market, and there was nothing in there that really was scary. So let's jump into what we are interested in. So today, AMD reports. Let's take a look and see if there's any setups here that cause us to believe we know where price is going to go, or where price should go. On a monthly chart, what does it look like? It looks like AMD has been reversing since it's had a reversal in price since, what month is that? March of this year. So AMD is certainly not a strong stock to be in. The relative strength compared to its index is weak. We see a price reversal here. That is the 4th of March. There it is. That's your high price on the 4th of March. It has since fallen nearly $100. Nearly, I guess that's probably $90 from a price of what? What's the high there? They call the high 230. Right now you're sitting at 140. Yeah, it's a $90 reversal on 230, which is what, 35%? Roughly, it's a 35% reversal since March. Definitely weak in AMD. Let's see. Do we see what we're going to look for are footprints of large institutions. Let's see if we see any. I see, I would say this here. I would say probably this in here. Whoop. I would say probably this in here. Average volume is probably about there. So we have some here, which is at a much higher price. All right, let's keep rolling. Nothing there that you would really be afraid of. Let's break it down a little more. Remember, we're on a 35% price reversal here, and it looks like the previous high that needed revisited was right in here. We're very, very close to where it sits, 130 or so. Actually, that's probably more accurate, which is 132. I mean, it is right there. So you can almost guarantee price is going to come into this. You do have a gap up here. This is a daily chart, 1, 2, 3. That was about 10 days ago. What day is that exactly? You have a gap at the 16th of July. Interesting. What do we know about gaps, everyone? Like, what do gaps tell us, and what do we know about them? Well, gaps are like effectively like an exit on a highway. Okay, the further, so if you're going north, right? If you're headed north, and your gap is an exit, meaning that you have to return to that price. You have to return to that exit. The further you get away, you don't get more time to come back, but the car will get more speed. So what do I mean by that? Well, if we're at exit 55 now, and that's where the gap is, let's call it exit to line up with price in AMD, exit 175. We're at exit 175 and we're screaming down the highway, and at 60 miles an hour, our speed is at 60. We get to exit 170, 160, 150. Finally, we're down here at exit 140. So we've gotten really far away from exit 175. So what does that mean? Well, that means to return to exit 175, the further we get from it, the faster we'll have to return to it. The more abrupt the move back to fill that gap will be. So what we need to know about this chart is, does this chart mine gaps? And yes, it does. Where you find a gap, you find a fill, meaning price returns to that level. You can see it as far back as you want on this. So what this tells us is that there is definitely the need to return to, call it 174 for argument's sake. Okay. Now what we want to do is we want to zoom in a little more. So we found this gap up at 174. Here we sit at 140 after 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days. Earnings are going to be announced today. That is not a bad day to start the move back to 174. But what we also know is just beneath us at 130 was the previous breakout price, which is another place that this stock should return to. So we know down here at 130 that we have to return to these two areas, okay? The further we get from 174, the more abruptly we will move back to that price. We are so close to 130. We're $10 away at 140. You're looking at a 7.5% move, right? No, less. A little less than that. You're $10 away. Maybe that's 7%, something like that. So maybe you're 7% away. And where are you from 174? Well, you're $35 away. So you're a good 25% to the upside there. All right. So let's remove those. Let's zoom in a little bit. Let's see if earnings is going to be used to move into one of those prices. So here we are. So we have a gap here. It fills, reverses, goes higher, reverses, goes higher. And here's that gap we're watching. So it's still here on the 4-hour chart. Do we see anything in particular with volume as of lately? What I would say is it has dried up. So this move down may have been institutions looking for more supply, looking for more stock. Why would we assume that? Well, when we were down at these price levels before, back here, look, I'll start to point some things out. So this is the same price level we're at now, But look at volume back there. Look at that. Here we are again down at these same price levels. Look at that volume. All right. Here we are again close to those levels. Look at volume. Pretty big. Now, we're back down here again, and look at this. Whoop. Bring that back down here. All right. That doesn't look anything like 1, 2, or 3. And they kept searching. That's why they kept bringing price down. This looks like a situation where prices will rise. Up until now, I want you to remember, we're on a 4-hour chart. We are on a 4-hour chart, so we can't assume anything yet. But this definitely looks like an area where price will want to rise. Where would that price want to go to? Where would it want to rise to? Simple. Boop. Back to exit 174. And swiftly. Okay? Let's delete these drawings. Let's move on. We'll go down to a 1-hour chart. We'll see what we see. All right. As you can see, look at this volume. It is really dried up. I mean, it is just gone. Let's zoom in again. There's this gap. Remember the gap. There it is. Let's come down further. Does this volume still look like it's dried up? Does it still look very, very small? It sure does. Let's go to a 15. Five-minute. Look at this gap on the 5-minute chart. Filled. All right, everyone. I think it is fairly safe to say that we are headed back to exit 174 or price 174 in the next 2 weeks. So let's go ahead and mark it. There we go. So this is 7/30/2024. We're going to do AMD. Price target 174. Today's the 30th. So we want to do, it's summertime. We're on a 15-minute. Ordinarily, this would take place in 5 trading days for sure. It's Tuesday. Let's give it till next Friday, 30th, 31st, 1st, 2nd. So it should be the 9th, 8/9/2024. And that's a huge run, everybody. That's a monstrous run right there. We may have to give that a little longer. It's summertime. You know what? We're going to give that. Yeah, we're going to give that another week to run 25%. There we go. I'm okay with that. There we go. Let's save you, my friend. All right, let's get back to a monthly chart. And where are we headed next? We are heading to EA and then MRK. EA, all right. Whoo, baby. EA, wow. Electronic card. Everybody knows what EA is. Come on. It's gaming, baby. This thing wants to go to new highs, it looks like. So when I look at this monthly chart, this to me looks like a stock that wants to go to new highs. The only thing I don't like is how long it's been sitting up here at highs. So traditionally, everyone, when highs are long, so when there's distribution at a high price, it takes time. Why? Because institutional money is selling back shares, which means it's dripping them off. It wants to get the highest price possible per share. So it drips back those share prices. When it wants to buy more, it dumps shares to drive prices down to invoke fear, and then it can buy, and then institutions can repurchase those shares. So when I see things at highs like this, I usually don't like it. And I don't like it because traditionally it does mean that they're selling. Although this has a little, this has some activity, some footprints that I see that lead me to believe that may not be the case. Let's zoom in. And remember, we don't carry our assumptions into the next chart. It's just all about recognizing, okay, what would this usually mean? What does this look like? Is there any difference right now? So, for example, earnings would be a great time to gap through this resistance level, which EA has been trying to get through since 2020. This would be a great time. Now, where do we see most of the institutional footprints? Where we see them is at low prices. There's one. There's one. Here's some. What's it look like now? I would say right now it looks like, pretty average volume. I mean, that looks like pretty average volume to me. Let's zoom in a bit. So it broke this previous resistance, which we knew. Here's a gap. This gap filled. So this chart minds its gaps because here's a gap and this filled. Here's a gap and it's filled. Do we have any gaps now to speak of? No, we don't. Let's zoom in a little more. Okay, this is definitely a volume bubble. This is definitely a volume bubble. 1 hour. Yeah, see all this volume now? Now it really stands out. Look at this. Look at this. Look at all this volume. That volume exists really sitting right there from a price of 140. All right. Gosh, and that's right now. Volume at a high price. I don't like that. That is not, when you see, remember, volume is nothing but trading activity. Standout volume means that institutions are involved. And I have to tell you, the involvement here does not look positive. It just doesn't. Yeah, that doesn't look positive. Let's take, what's it look like this here? I don't think they're trying to ramp up for a move up here. You're at a previous resistance. Mm. Mm. Well, I'll tell you what. For EA, I think long term they're looking to bust this thing higher. But there's nothing concrete at the moment. Let's move on to MRK. I mean, I can tell you that it looks like they want to bust it higher, but also there's a ton of indication on this thing that they're going to dump it first. And there's nothing really concrete there. There's nothing extremely concrete there either. So we're not in the game of guessing, right? We're looking for things that have institutional footprints that you can decipher, and you have a very good idea of what's going to happen. So this was a breakout price. It definitely returned there, broke out here. It returned. It's broken out again, and it's returned here. Let's go to a weekly on MRK. Is it back in the zone? Well, there's a lot of volume here. What's this? That's at the high price. That's not good. Moving on to a daily. Remember, a lot of times, like, look, I would love to give advice on every little move that happens. But if there is not something that is definable, I am not going to tell you, oh, just throw things at you. Okay. I can see the gaps on MRK love to fill. There's a gap down here. It just made a gap yesterday. Take a look at 4 hours. Yeah, there's that gap. You can see the gaps fill on this for sure. And they're gapping it up, which is never a good, never a good sign. Earnings, period ending, reported. Oh, it looks like they already did. They already reported. So I might be going through this for nothing. Let's see. What do we got here? Yeah, I mean, I would look for this gap to fill. This looks like they're selling it off. I'd look for this gap to fill. But again, there's nothing there that really piques my interest or makes me care that much. Let's look at PayPal, Pfizer, Procter & Gamble, and Starbucks. Let's look at ones that are important. Let's go to PayPal and Starbucks. PayPal may be our last. Oh my! So they clearly reported. Yeah, PayPal's been really ugly. A lot of competition here now. Also, people got way too hyped about these models. But this will head to call it 71. So here you go. PayPal, that's where it's gonna head. How do I know that? Because that's where it's going. It has to. So we'll do 730. Whoop. $2024 PYPL 171 or 70. It's just 71. Wow. 71, and now no price target. I'm gonna do the same thing. What's this? It's only 10% away. I'll do yeah, but that gap's way back there. Yeah, but it's gonna move quick. Let's give it 2 weeks. Let's go the 8. What I say it was 8, the 9th. There we go. You know what we'll do? We'll structure it this way. There we go. Let's quickly run through Starbucks. Oh, what do we got? 24. Okay, I'm gonna have to do this really fast, everybody. But let's see what we can see with Starbucks. Whoo, baby. No, that pretty much filled though. Daily. Let's go. I need to see this in a monthly first. 1 month. Anything? That doesn't look good. Weekly. Let's take a look. Oh, I like this. This looks like it wants to move up. That's nice. Let's go to daily. You have a very large gap right here. However, it's been basically filled. So let's keep zooming in. 4 hour. Anything? No. 1 hour. Nothing really. Nothing of a ton of interest. Okay. Starbucks is a wash, guys. There's nothing here that is mind blowing about Starbucks. So we are going to did we stop the share? Oh my goodness. I may have stopped the share a while ago and did not know it. Fantastic. All right. Hey, thank you so much for joining me. Remember, if you're not good up here, you're not good anywhere. Get outside, smile, fake it till you make it. I may have blown this video. I don't know. But I'm going to finish it the same anyway. Thank you so much for joining me. I hope this was helpful. I am starting a mentorship program, August mentorship program in 2 weeks. I'm only going to have five participants. I already have 2 spots taken. So I'm only looking for 3 more. I'm going to involve some crypto here as well. If you're not familiar with the mentorship program, please reach out to me. This is how you can find me. This is my Twitter, Derek Me 752-63605. I am on LinkedIn as the Honest Trader. And then you can email me at dmiller@prometheaninvesting.com. Ask questions about the mentorship program. I'm going to cover a lot more than I cover in these lives. I'm going to help you create your own investment plan via understanding the 3 pillars of investing, which is cash management, investment management, and risk management. We're going to look at stocks, we're going to look at commodities, and we're also going to start looking at crypto. I believe that is just another asset class at this point. It is moving the same way the stock market moves based on these same footprints. So we're going to start incorporating that for all you crypto guys out there. Remember, every day above ground